Is the surge in this life insurance segment being driven by conviction, or is it just a cycle? This week in life insurance, we're talking about the surge in variable universal life sales over the last year plus, and asking whether that's really advisors finding and rediscovering VUL, or is it more just them discovering a bull market? You can't deny that VUL has been hot right now. In 2025, we saw a 17% increase in VUL premiums. In the first quarter of 2026, that number was another 12% increase year over year. And at this point, VUL represents about 16% of individual life sales in the US, which is the highest rate it's been in decades. However, when you start looking a little deeper, you'll notice that those numbers also kind of coincide with a rising stock market. And as we know, VUL is different than other permanent products in that the premiums are invested in market subaccounts, which give the policyholders the benefit of any upside, but also the risk of a downside, because you don't have those floors like we do in IUL or other products. Now, through most of the first quarter, we saw a rising market. At the end of the first quarter, we saw some instability in the markets because of the Iranian war and oil prices, but a lot of the sales in the first quarter were booked. And now we're seeing more instability this week in the market with concerns over whether AI really is the future of the global economy. And so now we have to start thinking, were those IUL sales really driven by a belief in the product, or were they just the benefit of a hot hot stock market? And with John Hancock introducing their new protection VUL, it raises that question even further, because if this carrier is now going towards a protection rather than an accumulation product, do they see something happening or see something coming in future VUL sales that we haven't noticed yet in the market? It's a good question to ask. That's all for this week. We'll talk to you soon.